Okay, let's go. Good morning, everyone, and welcome to Gulf Intelligence Daily Energy Markets live video podcast on March the 17th, 2023, St. Patrick's Day. So the top of the morning to you. I sometimes get called a plastic paddy because I was born in London and have an English accent, but I've been an Irish citizen all my life to the exclusion of all others, and I take my St. Patrick's Day duties very seriously indeed, as anybody who knows me will testify. I'll be off dyeing my hair green immediately after the podcast. But I digress. What a week it's been. Reminiscent of 2008, some say. Suggestions of another global financial crisis in the offing after the collapse of some regional banks in the US. Oil hitting an 18-month low, though up a little bit today at 75.5 or so. And some big geopolitical moves in the Middle East. I've got three real gurus here with me this morning to dissect all that and make some sense of it. Three regulars on the show. So welcome. First, Adi Imsirovic, Director of Surrey Clean Energy and Senior Research Fellow at the Oxford Institute for Energy Studies, just outside London. Andy Laban, in his new role as Chief Commercial Officer at the Saudi Industrial Export Company, but based here in Dubai. Congratulations, Andy.
Thank you.
And Daniel Ramat, Senior Energy Security Consultant in Tehran. Always a pleasure, Dan. Nice to have you on.
So, this is mine.
Absolutely. We'll get onto oil a bit later in the show, but I want to look first at financial and economic markets. And Adi, let me start with you. The comparisons with 2008 to 9 are coming thick and fast, but are they correct? It strikes me that SVB is no Lehman Brothers, but is this the start of something bigger? Markets are febrile and prone to panic, aren't they? What's your view? Are we on the brink of something very bad?
Right. Good morning, Frank. Good morning, everyone. Happy St. Patrick's. I'm not Irish, but I'll have my coffee in a Guinness mug this morning.
Something stronger, anyway. I hope, later.
Right. Excellent question. Excuse me. Excellent question. Very hard to tell. I think, first of all, on a macro level, financial markets do matter for oil markets. We'll talk about it a little bit later. Financial markets are in turmoil. There's a very good reason for that. We do have high interest rates. High interest rates definitely will cause some problems for a number of banks for a simple reason that we've had low interest rates for such a long time. The banks have been looking for a higher yield, investing into long-term securities. Now, that's fine as long as you keep those long securities to expiry. The problem is that in the short run, if people lose confidence in a bank, what happens then? With the high interest rates, the value of those bonds has fallen a lot. They have massive losses. If there is demand for deposits on a bank, as it happens this time around, what happens is that banks will have to sell even more of those bonds and actually will take even bigger hit on their bond assets which they're holding. So the issue is this: most banks have been doing that, not just one that was most vulnerable. A lot of banks have similar problems, and I think it is a bit of a systematic problem. Now, on a positive side, I think since 2007-8, I think banks have been shored up. I think they've undergone some serious stress tests, and I think we've seen the regulators take a very, very swift and strong action. So I think that we are not going to see 2008 repeat again, but we do have some problems in our banking sector, and I think we should be very, very watchful and very, very careful about it.
Right. So if the problem seems to be with treasury bonds, doesn't it? You know, that SVB went bigger to those at the wrong time. So there is a weakness in the T-bills market. And they're also, you know, so far the main casualty outside the US has been a Swiss bank, you know, with Credit Suisse. If T-bills and Swiss banks are now regarded as risks. Doesn't that tell us about something systemic in the whole system?
Well, not necessarily, because I think that the Swiss bank had other issues. I mean, this is just a sort of nail in the coffin of the whole affair. I think they've had several issues. I won't repeat them. So the banks that have been mismanaged is as Warren Buffett would say, when the tide goes out, you see who is naked. And with interest rates going up, the tide is actually going out, and you're seeing basically it exposes all the weaknesses in our financial system. And we are seeing them now, and I think we'll probably see a few more. So we have to be very watchful, but at the same time, as I said, I think we've learned lessons 2007-8. We can see the government is stepping up and very, very quickly calming down the markets. So while the market is going to be wobbly maybe for a little while, I don't expect a repeat of 2008.
Right. Okay. Andy, let me ask you, how do you see it? We saw another bailout overnight, First Republic, $30 billion from a host of Wall Street banks. So, does this make it more serious, or is it all just a storm in a teacup?
I broadly agree with what Adi said. I think it is a little bit of a storm in the teacup. There are some underlying weaknesses in the whole structure. And I think part of the problem is, quite bizarrely, part of the problem is social media. I think the way every person is now so intimately connected to what's going on, you can get a wave of people doing the same thing at the same time very, very quickly. And the reality is any bank in the world does not have enough money to give everybody that's got money with them their cash back. So any bank in the world anywhere will go bust if you get a run on the bank, just like the governments can if you have speculators in terms of currencies. So I think the government in the US had to do what they had to do in order to reassure the public. In reality, SVP probably needed to go bust to teach the CEOs a lesson. And if you actually reflect on what the US government has done, the US government has only bailed out the public. They have not bailed out the executives. They have not bailed out the investors. Okay. Those people will still lose their money. It is just the public that they're protecting. They need to give confidence to the public so that it doesn't spread. It's not about an endemic issue, although you could argue, as Adi said, a lot of people have been chasing interest rates and hadn't actually really thought about the risk they were taking as the interest rate starts to rise.
Mm-hmm. Okay, so that talks to the issue of moral hazard, doesn't it? If the executives are not being bailed out themselves, and they do stand to lose and suffer, yeah.
Yep.
Yeah. Interesting. Tell me from the point of view of we are here in the Middle East, the point of view of local and regional banks. How do they stand in the sort of global health league, if you like?
So I was listening to the radio this morning, and that exact question was being talked about. And essentially, the banks out here have a much, much higher liquidity than any of the banks in the US and Europe. You've also got to remember, especially in the UAE, a lot of the banks are effectively government owned. So you have a government sitting at the back of it as well. So there's much more liquidity.
Yeah,
absolutely.
Yeah. And I guess also because they are tied to the dollar on the main parts, so therefore they have less control over interest rates anyway. They'll simply have to follow what the US is doing. Yeah. Okay. Daniel, in Tehran, what's the view in Iran? Is this just another inevitable crisis in the Western imperialist capitalist system, or is there a more sophisticated understanding of what's going on?
Of course, there are different views about things going on in the US and in the West. And there are economists and also the hardliners. Hardliners always repeat the same sentence that the West is crisis, the capitalism is about to collapse and blah blah. But there are more realistic views and realistic analysis about the reality of what is going on in the U.S. and the global economic crisis. What they had predicted, most of sophisticated economists here, and that and regardless the reality of what is going on in the U.S. when what is going on in the new banks crisis, especially the SVB's collapse in the U.S. There are many here who believe that the global economic crisis would end up in a sort of losing the chance for getting more out of the the very fruitful oil markets in the Middle East, which we lost the chance to come back to the JCPOA last year. And that's what many emphasize on, that we lost the time, we lost the appropriate time to come back to the global energy markets. And now we are facing a sort of global economic crisis which would both makes Iran harder to come back to any sort of deal with the West, and also losing a big money in those markets. Yeah.
Right. Okay. So Iran has missed out on the high prices that came in mid-22.
Right. Not only the high prices, but also the chance for gaining or absorbing as much investment as possible.
Okay. We'll talk more about investment in Iran a bit later. Let's talk about oil now. Alexander Novak, the Deputy Prime Minister of Russia, and also the man who is responsible for OPEC Plus policy there, visited Riyadh yesterday, where he discussed how to ensure oil market stability. But there are no other details from that. The next OPEC Plus meeting is not scheduled until June anyway, though the Saudis have signaled that there will be no stance throughout 23, no change in stance for the rest of this year from the October decision last year. So, things at a policy level seem to be fairly stable. So, Adi, let me ask you, what, in your view, is the cause of the recent malaise in the oil market? In terms of fundamentals, not much has changed over the past couple of weeks, but Brent is down roughly $10 from where it was at the beginning of the month. Why is that?
Well, Frank, you started for a very good reason with the financial side of things, and that's exactly why. If we all, most of us, 2008 is very fresh in our memories. Obviously, if you have banking financial crises, you can have economic crises very, very quickly following that up. And I think people are just scared. Having said that, the oil market hasn't actually come off that much. It's been in steady decline even before this, let's call it a quote financial crisis, because we don't know yet how it's going to pan out, hopefully in a good way. So it's been coming off steadily in the last couple of years. The simple fact is that that GDP growth and oil consumptions are decoupling. Okay, people are becoming more efficient, and the best cure for high prices are high prices. It takes a while to take effect, but it has been taking effect both in oil and gas. I think people have scaled back their consumption and increased efficiency wherever possible. And I think that's one of the lessons that OPEC does never seem to learn, that, by holding up the prices, actually, they're just speeding up the transition away from oil. So the financial reasons are the main reasons for that. And yes, financial markets do have a very important role to play in the oil markets, and they can lead them. Of course, fundamentals at the end of the day will prevail. And even fundamentals are not that particularly great. We've got, if you look at the balances, we have more supply than demand for the first half this year projected. At this time of year, March, April, we'll have a lot of maintenance. We see more Russian crude sitting on the water unsold. There are other reasons for that, of course, as well. But U.S. production is increasing, and exports. Europe is awash with WTI Midlands. crude, which is now a substitute for Russian crude. Plenty of Russian crude going to India and China. So, the bottom line is that there's enough crude out there. Simple as that.
Yeah. Okay. Andy, what about the argument that the crisis, if it is that, will cause the Fed to ease the pace of rate increases and therefore will encourage economic activity and therefore should be good for the oil price?
I think that politicians and economists are becoming much more aware that the blunt forces that we previously used do have unintended consequences because of other stuff going on. We've got this bizarre situation where the West is following the need to get inflation down, interest rates needs to go up, and the East is turning around and saying, yeah, but the economy is not that strong, so we need to keep interest rates low. So it's like, hang on, we've either got a global recession or not a recession, or no, it's actually far more complicated. I think that the oil markets are very driven by emotion currently and momentum, and there's just a lack of confidence which is pulling the market down. There's nothing that says, hey, it's going to be great next year, because all the messages are negative. So I think if the Fed starts to hold back interest rates, then there is going to be more confidence, and therefore you would expect to see some kind of enthusiasm in the oil markets, but that's potentially going to be impacted by, but then what happens to the inflation rate? So if inflation rates still keep going up, so the US is probably quite in a good position in terms of the inflation, where it's been talked about, the Fed is thinking about when do we change our perspective. If suddenly they say, oh, because of the banking issues, we've got to start pulling back on our interest rates, and then you start to see inflation going back up again, it's kind of like you're in a washing machine. You don't know which way is up.
Yeah, there has to be
I may
some.
add, Frank, sorry, I totally agree with Andy. I think the problem, a lot of people are now asking for central banks to step down and basically ease off the rates, or at least not increase the rates. But my argument is very, very simple. We're having these problems precisely because we've had low interest rates for such a long time. So this is, I wrote in the chat, this is like an alcoholic asking for a bottle. Yeah, sure, alcoholic, fine, here's the bottle again, go back. What are we solving by doing so? Anyway.
So we need a bit of cold turkey here, do we?
I'm afraid so.
Yeah. Dan, there are big quantities of Russian and Iranian oil still reaching markets despite Western sanctions and price caps. How big a factor do you think this is in the relative price weakness that we've seen recently?
It has its own impacts, of course, because these oils are now only sold by their own names and under their own title, but they're getting blended with the other types of oil, and that would definitely impact the oil prices, especially the Russian oil's flow towards China and India has really touched the demand side in the Asian market. So, and as you know, the only window of hope in the current and next year's signals, actually, the news about the positive news for the oil market is the increasing demand in China, and that increasing demand would be totally supported and supplied by Russian and Iranian crude with significant discounts. So that has a sort of, I believe that has an important role in the weakening the prices. But of course, the global economic crisis, the major and the main reason for weakening the markets and the lower prices now. I think Iran is going to continue increasing its exports to China. I don't believe India would buy Iranian oil, but China is going to import more Iranian oil at the moment. I think Iran is exporting 1.5 million barrels per day to China, something, and something about 800 700,000 barrels of refined products and huge amount of petrochemical products to China. So, but Iran is still competing with the Russian new waves of Ural crude coming to the Asian markets. And of course, Andy and you and Eddie know that even more Russian crude and Russian refined products are coming to the Persian Gulf and the GCC market. So yeah, I think that would be an important development in the market.
Dan, let's stay with you on the geopolitical side of all this and what's been happening this week, specifically the Iran-Saudi rapprochement, as they're calling it. This has been billed as a seismic event in the Middle East and indeed the world, signaling the beginning of the end for US influence in the region and the coming of age of China as a diplomatic player. How's it being portrayed in Tehran?
It was a very shocking news to the public, because just few weeks before that, during the protests in Tehran, Iranian officials were shouting that you're going to Saudi has to pay back for supporting the protests in Iran via the television networks here or there. And also they were speaking about the huge amount of Saudi money coming to the Iranian protesters and blah, blah. But immediately after that, we saw Iran and Saudi made a deal. There were many waves and rounds of negotiations and talks in Baghdad and elsewhere between Iran and Saudi, and also Iran and the UAE and the others. But there was no significant or any obvious outcome out of those negotiations. But what made China so strong to be able to make such a deal between Iran and Saudi Arabia? You know, President Xi visited Riyadh a few months ago, and there were some actually issues came out of that in Iran. People were talking about how deep China and Saudi relations are going, and Saudi is going to approach towards a nuclear weapon or nuclear program, at least with the support of the Chinese, and China has supported them in somehow, and it was considered a sort of betrayal from the Chinese sides against Iran. And then President Raisi, President of the Islamic Republic, went to Beijing and had some meetings and negotiations, and there was some talks about the Iranian-Chinese strategic 25-year deal is now gone, and Chinese have decided to replace Saudi with Iran. So I think China, as the sole buyer of Iranian oil, has a very strong leverage over Iran to push the Iranian establishment towards a sort of deal with Saudi Arabia. And also, we know that both Iran and Saudi are frustrated and are very tired about their endless fight in Yemen. And there is no fruitful result for any side of that conflict. So they decided to get to a sort of deal. Also, China, because China is relying on the GCC oil and Iranian oil too much. It's very important for their economy. They need to maintain or establish a sort of new. If we cannot call it a new order, we can call it a sort of new peace in the region, and new peaceful relations in the region. So, what regarding the first part of your question, whether this U.S. hegemony or U.S. power in the region is gone, I cannot absolutely agree with that sentence, because I believe that still the United States is the first and the most powerful element in this region. If they absolutely leave the region, there would be no room for such peacemakings. I think all these peacemakings are still under the hegemony of the Americans here.
Yeah, I saw one expert, Kim Gattas, described it yesterday, or the Saudi position yesterday, as extreme balancing, i.e. they're having to be on tiptoes, going west, going east, going north, Russia, US, China, and Iran, of course. But let me get another view on that, Andy. We're both on the other side of the Gulf from Dan. What do you see as the Saudi motivations in this rapprochement? What do they get out of it? I saw the Saudi finance minister, Mohammed Al-Jadaan, yesterday was talking up the investment opportunities for Saudi Arabia in Iran. Is that realistic?
I think it comes back to what Dan said. I think with everything that's going on in the world today, I think this region needs some stability. And anything that is, arguments with next door neighbors or friends or family is just unhelpful in today's environment. I think that the region needs to represent an area of stability from everybody's perspective. I mean, if you stand back and think, what's Saudi's long-term goal? Saudi seems to be positioning itself in the long term as wanting to take the mantle away from Dubai in terms of the place to do business.
Financial hub,
you can't continue down that path if you're fighting wars and arguing with your neighbors. It doesn't work. You kind of have to work out how to balance between everything and be a friend to everybody. You don't need to get on, but you need to be a friend to everybody.
Right. Adi, let's get a wider view from you, because suddenly a sort of Saudi-Russia-Iran alliance looks possible now, doesn't it? What effect would that have on energy markets? And perhaps more important, what would that mean for the war in Ukraine? If Iran isn't supplying the Houthis and Hezbollah with weapons, do they end up in Russian hands against Ukraine?
Wow. I mean, these are some serious theories. I don't know. I mean, last I remember, the Saudis were actually supplying some aid, at least, if not weapons, to Ukraine. So it's difficult. I wouldn't read too much into this. I think you're going back to the sort of OPEC plus situation of Saudi and Russian alliance. I think it's a very opportunistic alliance. I think it's taken Saudis years to get, one of the big three producers in their fold. And I think the main reason why Russia is still in OPEC plus is because of that, is because it's just taken such a long time to do that. For the Saudis to sort of discard Russia right now from the OPEC plus probably wouldn't make that much sense, even though Russia doesn't play any role whatsoever in OPEC plus. In fact, I think that OPEC plus is slowly going to fade into obscurity over time. For a very simple reason. I said for a number of times in the last forum in London, gas was the lever for Russians to use it as a political weapon. So they weaponized gas. But now that that's failed, oil's never been much of a weapon, nor will it be a weapon for Russia, simply because Russia need the money and oil equals revenue for Russia. It's the main source of revenue for Putin. So all these talks of cuts of 500,000 barrels, the only reason Russia would cut 500,000 barrels is if they have to cut. Otherwise, they need that. They need every single barrel. So from that perspective, when you take that into account and you look at OPEC plus, what does Russia do for Saudis and for the rest of OPEC? Nothing really.
Yeah, it's a good question. I've been asking myself that for some time, but they seem to be completely hand in glove.
It just suits them right now because, it's just taken such a long time. And the fact that Russia is Joe Boning the oil market is hopefully a good thing for everyone else at OPEC. And the noises that Russia is making can only be positive. And I hate to say the war is good for the rest of the producing nations because, obviously it's keeping the prices up. Well over and above where they should be fundamentally. But other than that, I think it's just a short-term kind of alliance between them, but I just don't see that alliance lasting for a very long time.
Right. Can we pull up the poll question, please? The survey question. Very simple one today. Can the US banking crisis be contained? Simple yes or no, please. So do that. And well, certainly the UK managed to contain the spillover from SVB, didn't it? With that very quick and apparently efficient takeover by HSBC. But we saw a lot of these forced takeovers back in 2008 and 9, didn't we? HBOS, I recall. Which turned into a real disaster and brought down Lloyd's in the end as well. So let's get the can we get the answer up there, or is it too soon? I may have left it too late. There we are. Yes, okay. Well, that's 2-1. That's pretty optimistic for the rest of the world, isn't it? We all hope you're right.
Well, the rest of the market agrees as well, because the oil price is higher this morning, right?
Yeah, a little. Yeah, 1%. Okay, yeah, 1%. Yeah. Okay. Well, look, we've reached the end. So thank you very much, Adi Imsirovic, Andy Laban, and Dan Ramat. It's been very interesting and entertaining as ever. So thanks, everybody. Have a great St. Patrick's Day, all of you who are celebrating it. It seems to be the whole world nowadays. So thank you all very much, and see you again soon, I hope.
Thank you very
Happy
much.
St. Patrick.
Bye.
Thank you. Bye-bye.
Thanks. Bye-bye.
Bye-bye.